What if I told you a 10-year-old could build more wealth than most adults by understanding one simple idea? That idea is stocks. Meet Zeke. He's 26, has a job, saves a little. Every time he hears stocks, he says, "I'll Google it later." He never does. One day, his coworker makes $400 doing nothing. How? Stock market. Zeke searches it, gets confused. PE ratios, market cap, bull, bear, none of that matters right now. What even is a stock? Like I'm 5. Imagine your sister starts a lemonade stand. She needs $100. She asks you for $50 and offers you half the business. You say yes, you now own half. That's a stock. A stock equals ownership in a business. Big companies do the same. You buy a piece. If the company grows, your piece grows. Now, why do prices change? If everyone wants that lemonade business but there's limited pieces, price goes up. If nobody wants it, price goes down. Simple. Supply and demand. Stock prices aren't about math. They're about what people believe a company is worth. So it's just people agreeing on a price? Exactly. 3 mistakes beginners make. 1. I need a lot of money. Wrong. You can start with $1. 2. I'll time the market. Even experts fail. 3. Price dropped, sell. That's where beginners lose. Drops can be opportunities. What should you do? Step 1. Open a brokerage account. Step 2. Start with index funds. Step 3. Invest monthly, automatically. Zeke invests $50, sets auto invest. He didn't become an expert, he just started. I was scared of something so simple. Truth is, the stock market rewards patience. It has always gone up long term. Every dollar you invest is a bet on human progress. You don't need to be rich, you need to start. Subscribe. Next, Index Funds Explained.